Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the euro currency. Well, as we said in our weekly research on the current week and last week, Euro Union right now stands in the crossing of the extremely sophisticated and really complex geopolitical and economical turmoil. And in fact, the piercing in the cloud for euro in the current situation now exists. So we think that euro currency in the long-term perspective will remain under pressure, and that conclusion comes mostly and is based mostly on geopolitical situation, the relation between the Europe and the United States, and the questions of the Ukraine, and the questions of the relations with the Russia, and this currently really stands as the major concern and major problem on the way to improving of the European economy. Because currently the United States can't totally replace the power of the Europe and Russian relations, because Russia is the third largest trading partner for Europe, and it's very difficult just to drop it away and cut off the cooperation with Russia, and as the markets already feel the impact of the sanctions and some difficulties in the mutual relations between Europe and Russia, that probably will continue. From the economical point of view, as you see, as United States economy stands on the improving, European economy, European Central Bank notes more and more dovish policy, and recently Draghi said that European Central Bank thinks about the reaching of the balance that stands on the levels of March 2012. That's approximately 3 trillion euros. It means that European Central Bank could turn to the buying of the sovereign bonds, and it means that the quantitative easing program in the Europe really could be even more significant than market thought initially. That's why strategically in the long-term perspective, euro probably will stand under pressure, although some small rallies, short-term rallies and bounces probably will happen, but in general the downward direction should continue in the nearest future. United States economy, there is only major concern on the wages and the wealth of the middle class, because although the economy is improving, gross domestic product is growing, consumer confidence is rising, job reports shows nice and impressive data, but at the same time the wealth of the people, the wages are stagnating, and that's also hurts the inflation, as inflation stands anemic. That's not very typical situation for the growing economy, but sometimes this happens on the first stage of the growth, when the economy shows disinflational growth, and maybe here we have the signs of particular this first stage of the economic cycle, when the economy turns to growth, but inflation stands flat. So let's see what will happen in the future. Speaking on the short-term tactical situation, here guys, we see the potential for the possible retracement up, but the major concern, major riddle here is how deep this retracement could be. Because if we will take a look at the previous bounce up, it was rather significant, but keep in mind that here market was at weekly oversold and on the daily oversold. That's why when the market stands at the weekly oversold, it really easily could hit the daily overbought. So reaction is equals to the counter reaction, and that's why retracement was really significant, because market was extremely undervalued on them, extremely oversold, overextended to the downside even on the weekly chart. That's why this retracement was deep. It was really significant. Here, guys, although I have drawn this ABCD pattern, but we can't exclude the chance and can't exclude the situation when the market will show just the one leg of the retracement, because in fact market is not oversold right now, and the one factor that holds market from the downward action is the technical support, and this support is not really very impressive. That's just the monthly pivot support line and the completion of this butterfly 127 butterfly pattern. As you can see, the reaction on the flat non-farm payrolls data yesterday was relatively mild, and not very significant bounce up has happened. And this points that probably market could limit this retracement only by retesting just the reaching of the weekly, monthly pivot point. It's 126.30 area. That will be also the daily rebut and could turn to the downside. That's also possible. Anyway, if even market will form some sort of the ABCD deep retracement, this retracement probably will be compounded and will take shape of this pattern, because that's the overbought, and market just will not able to continue move right here without retracement. If this will be a deep retracement, then probably we will get some sort of action as we see here, ABCD pattern. But as we said, it is still possible that retracement will be smaller, and I think that the probability, the chances of the small retracement right to the weekly monthly pivot point is greater than this compounded ABCD retracement right to the 127.60 area. So let's see what will happen. But chances on this bounce really significant, because market have some intraday targets, market stands in support, has completed this butterfly pattern. So some minor retracement for reaching of the weekly monthly pivot point is really possible. Besides, the monthly pivot point has been tested yet, and as you know, market gravitates to testing the pivot within the period of trading. So within the November, market could make an attempt to retest this area. Also, very significant data that market has expected already have happened, and we have some relatively calm period when the market could turn to some flat action to get some relief. So that's why this bounce up is really possible. On the 4-hour time frame chart, we see some just one concern with this situation is that market hasn't quite completed this ABCD pattern that we have discussed on the previous week as well. As we said that, as this action was really fast, we said that market probably will continue move right to the 1618, and that has happened. But as you can see, market hasn't quite reached this target. That's why if you would like to take the stake on this upside action, place the stop somewhere below this 1618 target. Because if market will return just to complete this pattern and then turn to the upside, your position probably will survive and your stops hardly will be triggered. If market will break this area and will hold below the 1618 target, this probably could mean that market is ready to continue move right to the 122, our medium-term target directly. It means that hardly any retracement will happen. So the crucial area for the coming week is this 123.25 area. If market will hold above it and just testing it and turn to the upside, or will start action right here and form maybe even, as you can see, a head and shoulders pattern here, in this case retracement probably will happen. If market will break this area, then we should be ready for the direct action right to the 122. So that is our current view on the market. Keep an eye on this situation. As market stands at the support and completes some intraday targets and intraday patterns, the chances on the at least small retracement right to the monthly pivot points exist, and this retracement really could happen. So let's see what we will get.